All right, let's just push. I could not reach here. Okay, price can be represented either by a line graph, like what we have here, or disable waiting room. Or it can be represented by a bar graph, like we have here, or it can be presented by the famous and most powerful Japanese candlesticks. They were invented by Japanese, so that's why you will see when we look into their names and their types, they will use Japanese names that we don't even understand. But yeah, we just have to go along. What is a Japanese candlestick? A Japanese candlestick, it's a visual representation of a price movement. The screen sharing is paused. What are you seeing there? Is my screen, can you see my screen now?
Yes.
Okay. A Japanese candlestick is a visual representation of price movements that offers valuable insight into market sentiments. Sentiment is basically if you are to have an idea on how many, if you are trading Euro USD, for example, and if you are to know that maybe 60% have bought Euro USD and 40% have sold, those kind of information where you can tell how many buyers are in the market and how many sellers are in the market. That is what is known as market sentiments. And then Japanese candlesticks gives a representation or information that are of this nature. It can tell you how buyers are entering the market, how are they leaving the market, how sellers are moving the market, and so on, and can help traders predict future price movements. To understand the candlestick, let's look at its anatomy. The first thing that we have two types of candlesticks. First, we have a bullish candlestick, which is usually green. The traditional, it's green, or sometimes it's represented in white, a bullish candlestick. And then we have a bearish candlestick, which is usually in red, bearish, red. And then bull. Bull represents, it's derived from the bull, the animal, how it fights. It fights like from the ground trying to hook you up. Then bull represents buyers. It represents when the price is going up. We reference to bulls, and with a symbol green. And then red, it refers to when the price is going down, and we use bear for price going down. It represents sellers. So I say bull represents which ones? Buyers or sellers? What did I say?
Buyers.
And for bears, it represents?
Sellers.
What does red represent?
Sellers.
Sellers.
Green
Sellers.
represents? Green represents?
Buyers.
All right.
Buyers.
In some cases, you'll find white and black, where for white, it's used for buyers, and black, it's used for sellers. But a traditional way, it's green and red, okay? And then at the bottom, it indicates the opening price. That shows where the price have opened. Yeah? You know, for a buyer, for a price to go up, it has to start at the bottom and ends at the top, isn't it? Then for a price to go down, it has to start at the top and then go end at the bottom. So for a green candle, it has to start at the bottom and go end at the top. So the bottom part, it's known as where the price has started. Maybe if we are looking at an hour between 8 o'clock to 9 o'clock p.m., you want to see how the price has started. Maybe exactly at 8 o'clock, you will have what is known as the opening. The opening, it's usually a horizontal line. It indicates where the price has started. And then between 8 and 9, price can move around. And then the lowest level it reached, maybe between 8 and 9, it's known as the low, okay? And then the highest level it reached within that hour, it's known as the high. And then where the price will end, it's known as the closing. Are we following?
Can you repeat again, please?
Okay. Maybe let me try to use a whiteboard to draw for you. Okay, this is what we have. Let's assume the price, we want to track how the price is moving between 8 o'clock and 9 o'clock. Né? This is how you will go about it. Okay, where the price will start, né? Let's say for a green candle, né? At 8 o'clock, where the price will start, we are going to put a horizontal line like this, né? And between 8 o'clock and 9, price can go up, and then maybe 5 minutes past 8, 10 minutes past 8, you know, price fluctuates. Then maybe 20 minutes past 8, it can go down, and then 30 past, it will go up again, 40 past, 50 past, and then 55 past, it can go down a bit. So at 9 o'clock, where the price will end, we'll put a horizontal. So there will be two horizontal lines where the price started and where the price have ended. Are we fine there?
Yes.
And this shows the lowest level it reached within that hour, and this shows the highest level it reached within that hour. Are we fine there?
Yes.
And then these two horizontal lines, you will shade them like this. That is what we have. Then how do you interpret it? Where the horizontal line is, that is the opening, that is the closing, that is the highest level it reached, and so on. That is what we have then on this. This is what we have on the slide. That is the opening. That is the lowest level it reached. That is the highest level. That is the closing price. Is it clear now?
Yes.
Okay. Then the same for a bear candle. That is the opening price. It will open at the top and go close at the bottom. That is the opening price. That is the highest level the price have reached. That is the lowest level it reached. That is the closing price. Is it clear then?
Mm-hmm.
Yes.
Move forward.
Yes.
Lakia. Lakia,
Yes, sir.
are we on board?
Yes.
Peneafo, Helvi, Elina, Elias, and Takonjo, Eleni. Are we fine?
100%.
Yes.
Yes,
We are fine, sir.
fine.
All right, great. And then the shaded part, it's known as the body of the candle. And then these lines on top at the bottom, they are known as shadows or wicks. Okay? So we now move to the properties of candlesticks, the colors, the body size, the range, and the shadow location. Okay? So the colors are traditionally displayed as green and red candles, or white or black candles. Okay? The open or the low, and then the closing or the high. For a red candle, it opens high and then it closes low. Okay? For the green candle, it opens low and it closes high. So bullish candlestick opens low and closes higher than opening price. Just a moment. Just hold a bit. All right. Let's just take a step back. That is for a green candle, sometimes represented white. It opens low, it goes up, and then it closes high. Then for a red candle, it opens high, goes down, and closes low. So bullish candle opens low and closes higher than opening price, while the base candles opens higher and closes lower than the the price, and then the body. The body size represents the degree to which the bulls overcomes the bears, the extent of the price change during that period. The body, you can also treat it like in real life, like human beings. You know, short people, they are not that intimidating. Sometimes you'll be like, what will that person do to me? That short person, you see. But when it's a giant like a bouncer, you get scared. It's the same with candlestick. Those ones that are like giants, they intimidate the price. They move the price. We are scared of them. And the short ones, we don't really mind them. So a large body suggests strong buying or selling pressure depending on the whether the candle is bullish or bearish. Okay, a small body signifies that there was little price movement between opening and closing price. The range, okay, the range refers to the difference between the highest price and the lowest price reached during that period. High price reached, for example, that is the highest price reached and then the lowest price reached. A wider range shows an increase in volatility. When the range is high, let's say the movement from the bottom to the top is very high, it indicates that the price have moved up and down a lot compared to when the range is very low. The height, actually, the range we are referring to the height. When the height is like tall, we see that the price have moved a lot within that hour, but when the height is short, it's like the price didn't really move within that hour. Okay? Then a narrow range shows a decrease in volatility. A narrow range shows a decrease in volatility. That's the price. It shows the price didn't really move. Shadow location, we move to above when the shadow is on top. And then here at the second case, the shadow is at the bottom, right? A longer upper shadow, when the shadow is on top, indicates that price is being rejected or suggesting potential sell. Let's have a look at what happened when the shadow is long. So the price started, for sell, the price started here, né? And then what happened? It went up until right there. And then buyers came in to push the price down until, sellers, sorry. Sellers came in to push the price down until here. This indicates that the price is being rejected, né? Suggesting a potential sell. Why? Look at how powerful these sellers were, just to push the price down from that top until it closed here. It indicates selling pressure. And then when you have a shadow at the bottom, it indicates buying pressure because the price opened here. Yeah, the price opened here and then it went down. And then buyers came in to push the price until right there. It indicates buying pressure. That is, the price opens high, price pushed even higher, you see, but bears took over control, closing price lower than the opening price, suggesting a sell. Are we fine? Are we okay?
I'm a bit confused.
Yes, good.
Where are you confused?
When even my mind doesn't make sense. You can just go on. Unless you start over from when the price opens high. And what?
What we are saying, let's go through slow by slow. Ne?
Okay.
Do we agree that for a sell, price should open high and it should go close low? Do we agree there?
Yes.
Okay. Does that mean it opens high and closes low, like below, like
Yes.
down?
Yes, it
Oh,
opens
okay.
at the top and then it's pushed down to go and close at the bottom. That is a sign of a selling. That is a selling sign. Do we agree there?
Oh,
Yes.
okay.
That is what we mean. Price opens high. So since it's selling, we expect the chart to go down. It should go and
Yes.
end or close at the bottom. Is it fine there?
Yes.
Yes, it's fine.
Then price closes low. It opens high, closes low. Are we fine?
Yes.
Yes.
Okay. Now what we have here again is that the price opened high because that is where the horizontal line is. Do we agree there?
Yes.
And then
Yes.
this price, after it opened, maybe within that hour, it was pushed even higher. Do we agree there?
Mm-hmm.
Ne? But after it was
Yes.
pushed, maybe 20 minutes past, 30 minutes past, later,
Mm-hmm.
the sellers came in strongly. They pushed the price all the way down until here. Do we agree there?
Yes,
Yes.
sir.
That is where it says, but bears took over control, closing price lower than the opening price. Then this movement on how the sellers came in aggressively to take the price from this high level up to this bottom level, this is what is suggesting a sell. Do you agree there? Or do you understand?
Yes.
Are we fine now? Can we proceed?
Yes, you can proceed.
Okay. Then here we have a lower shadow. The top one, the first case is giving us an upper shadow with a body at the bottom. The opposite also holds. That is a lower shadow that price is being supported, suggesting a potential buy, while price opens low. Hope we are fine, eh?
Mm-hmm.
And then it goes lower again within that hour. Let's use an hour, né? Price fell even lower. After opening, it went down again. Do you agree there?
Yes.
Then what happened after it went down?
It goes up.
Buyers
The
came
buyers
in.
came in.
Pardon?
The buyers came in and then pushed the price up, if I'm not mistaken.
Yes, that's correct. The buyers came in strongly. They were like, no, sellers, if this is not your time, it's our time to shine. You are not going to dominate us. We are going to push the price up. The buyers came in. Those are the bulls, né? Took back control, closing the price above the opening price, suggesting a buy. This is what suggests a buy, because in this case, the buyers they came in to dominate. So when you see dominant, then that is a suggestion of a buy. Are we fine?
Yes.
Yes.
A lower shadow, that price is being supported, suggesting a potential buy. Then we move to the common candlestick chart patterns. The first one that we find is the doji candlestick. This one, it looks like a cross. Ne? Let's study the behavior of this doji. A doji is just a candle that looks like a cross. So this is a single candlestick pattern which can either be bullish or bearish. It can either be red or it can be green. Before we go in, let's study the behavior of this. This shows the price opens here, ne? Are we fine there?
Yes.
Then it either goes up and down, it doesn't matter. Let's say it goes up and then it comes back, it goes down, then comes back and close at the same level where it opened. That is what the doji is telling us. Ne? This is a single candlestick pattern which can either be bullish or bearish. The open is equal or almost equal to the close, resulting in no real body. That's why the level where it opened and where it closed, it's the same, and it does not create a room for a body to show. Are we fine there?
Yes.
That
I
type
have
of,
one quick question.
yeah.
Just a quick one.
Mhm.
Tell me, when you say this single candlestick pattern, which
Mhm.
can either be bearish or bullish, how will you know if it doesn't have a color, or we are yet to get there?
Yeah, we are yet to get there.
Oh, okay.
Yeah, on the MT5, you are going to see colors there.
Okay.
Yeah, the black is just for demonstration, but it will come with colors.
Oh, okay.
Yeah. Okay. So what we are saying is whether it comes green or red, a dodge is just a dodge. Whether if it's a cross, whether it's in green or in red, it's just a dodge. Okay. It indicates an indecision. What does it mean? In the market, just a moment. It indicates an indecision in the market. Neither the bulls or the bears, just a moment. Okay, it indicates an indecision in the market. This shows neither the buyer or the bears are in control. Why? Because the price started at the same level, buyers pushed it up, sellers pushed it up, and then they pushed it to the same level. It's like a fight between buyers and seller, but no one is taking control. That is what it means. And then the type of doji candles that we have, we first have the dragonfly doji. It's usually found at the bottom. At the bottom, it's usually, let's say, support. Did we talk about support and resistance? Oh, yeah, we didn't talk about it yet. Maybe we'll still get there.
Not yet.
Okay, it's usually found at the bottom of the price. Price usually swings. Sometimes it goes down, like sellers, when sellers are going, okay, let me just demonstrate like this. Price fluctuates, it goes up and down like this. So this kind of candle, it's usually found here at the bottom. That is what we are saying. And this bottom is what we call support, and this top is what we call the resistance. We'll get there, but it's usually found at the bottom. And suggesting a buy. So when you see this at the bottom, it will suggest a buy, but it will make more sense when we talk about supports and resistance. That is suggesting a buy, okay? Then we have the gravestone doji. It's usually found at the top, suggesting a sell. The dragonfly doji is usually found at the top, and it's suggesting a sell. And then we have a shooting star. That is a shooting star right there. The shooting star, it's a special type of doji, which is it will be more confusing when we talk about hammer. This is a single candlestick bearish pattern, usually found at the top. It's in a category of a hammer. You know how a hammer is. It's used to hammer something. You get it? Maybe a nail or whatsoever when you are working with, tool works. So it's used to hammer something like a nail to go in. When you want a nail to go in, you use a hammer to hammer it. Or when you want to destroy something. It's the same with at the Forex market. The hammer, you will find it either at the bottom or at the top. The function is the same, is to hammer. So if price was going up like this, it was coming, this sticks shows the price was going up. The hammer will come in and hammer the price to go down. If it's at the top, if you see, price moves up and down like this. If this is just a moment, this student that I was looking for is here. Miss Karigi, good evening. Miss Karigi, good evening. Fine, thanks. All right.
Yes.
You are missing class.
I'm missing a lot.
Yeah, last time you missed again, and then I see that the things that you were asking are the same things that we did in class. So I was like, wait, yeah.
Oh.
Okay, it's fine for now. I'm recording the session. I'll try to drop it for you, but we have class tomorrow and Thursday. Let's see if you can manage to attend.
point that I attend.
All right, that would be
What
best.
time?
Yeah, 8 to 9.
No, I will. I
All
will
right.
attend.
All right, perfect.
Thank you so much.
All right, good night.
Night.
Okay, so when you see a hammer here at the top, it gives you confidence. So how do you know when to buy and when to sell? If this is your top based on your analysis, you'll understand later. Then you see a hammer forming again at the top. That's when you know that, yes, this is hammering the price to go down. You take your sell here. When this is your bottom and you see a hammer here, then it can give you confidence to buy in expectation of the price going up. But that is how you apply the hammers and these candlesticks. Ne? You use them for confirmation, either at the top or at the bottom, to take your position or to take your entry. Okay. This is a single candlestick bearish pattern, usually found at the top. Upper shadow is at least 2 times the size of the real body. What we have here, let me just try to mute you all. Okay. What we have here is this upper shadow, ne? It's almost times 2 of this real body. The height of the shadow is longer than the height of the body. That is what we have there. And then color can either be red or green. It doesn't really matter. It's a hammer, but it's specially known as a shooting star. But for me, to avoid confusion, I call all of them hammers. You get it? It's a shooting star. Ne? And then a red shooting star is much more bearish than a green shooting star. Meaning, if you find a red shooting star at the top, it's more powerful when you are looking for selling opportunity. Then you find when you find a green one at the top and you are looking for selling opportunity. You get it? That is what we mean there. And then we have the original hammer now, which is just the opposite of the one that we had there. Ne? This is a single candlestick bullish pattern, usually found at the bottom. Lower shadow is at least 2 times the size of the real body, similar to the case that we already had. Ne? Color can either be green or red. A green hammer is much more bearish than a red hammer. Ne? It's supposed to be the other way around. There is a mistake in the slide. A green hammer is much more bullish instead, sorry for that, than a red hammer. Okay? What we mean is, if you find the price is going down and this is your bottom, then you find a green hammer. It's more bullish, it's more powerful for buyers compared to a red one. Because you want to buy and it comes in green again, it's double confirmation. Instead, when you want to buy and you find a hammer, it's a buying sign, but it's in red, you'll be like, but why is it in red? So a bullish one, it's more powerful than a red one. When you find it at the bottom, that is a hammer. Are we fine there before we can proceed?
Yes.
We are okay, ne?
Yes, sir.
All right, that's great.
Mhm.
Okay. Moving forward, we have a hanging man. It's just the opposite kind of hammer that we have there. A hanging man. This is a single candlestick bearish pattern, which is found at the top. Ne? Lower shadow is at least 2 times the size of the real body. Color can either be red or green. A red hanging man is much more bearish than a green hanging man. This is just the same concept that we have there. Then we have this one, the inverted hammer. This is a single candlestick bullish pattern found at the bottom. Upper shadow is 2 times than the body. color can either be green or red. A green one is much more bearish, bullish at the bottom than a red one. Okay. Then we have a bullish engulfing. What is an engulfing? Before we get to that, an engulfing operates in this way. Let's say you have a candle that was going down. Let me use what color can we use? Maybe red. Let's say we have a candle that was going down like this, né? And then we get a green candle after it that will take the space, you know, the height of the previous candle, né? The next candle gets to have a higher height than the previous one, and it starts at the bottom or at the top of the previous candle. I don't know if my English is Englishing. Let me try to re-explain, because a bullish engulfing can be in this manner. Né? Let's say you have a red candle that forms like this with a short height, then followed by another red candle forming like that, followed by another red candle forming like this. Maybe this is an hour. Let's say this is the first hour, the second hour, the third hour. And then the fourth hour, you get a very aggressive candle that is very powerful. Né? And then it gets to move like this. Very powerful. And what took 3 candles, the height that took 3 candles to drop, it only takes 1 candle to occupy all the distance that took 3 candles. Am I making sense? Are we there? Are we on board? So
Yes, sir.
this took 3
Sir.
candles. This the red candles took 3 candles for it to drop from here to there. Né? But this green candle only takes 1 candle within an hour to cover the same distance that took 3 candles to cover in red. So this kind of behavior, it's very aggressive, and it's known as an engulfing candle. So this candle that does this is known as an engulfing. It can either engulf 2 candles or 1 or 3. So for one, it engulfs in this manner. It will start at the bottom and then go and end at the top. So what took this candle to cover in a short, this candle covered only a short distance, then this one comes and cover a very long distance. Hope you get the idea. So that is an engulfing candle. And then we have, this is a 2 candlestick bearish pattern. The first candle is a smaller green body. The body of the second candlestick it completely engulfs. It's like it swallows the body of the first candle. And then the bullish engulfing is in a similar manner. This is a 2 candlestick bullish pattern. The first candlestick has a smaller real body. The body of the second candlestick completely engulfs the body of the first candlestick. The body of the second candle. First, we have a red one. Then second is a green one, which completely swallows the previous candle. Okay. Then we have a dark cloud cover. We have a dark cloud cover. This is just another version of an engulfing. This is a 2 candlestick bearish pattern. The first candlestick has a green real body. Yeah? And then the body of the second candle opens above and closes in the second lower half of the first candle. What do you mean there? So see where this one opened. This one closed there. So usually when candles close, when this one closes here, let's say if it opens here, then close there, the next one is supposed to open where the previous one closed, and then it closed, let's say there. The next one is supposed to open here, and then continue like that. But when the candle closes here and the next one is opening at a different price, there is usually something fishy, meaning something is about to happen. It's either buyers about to take control or sellers about to take control. So what we have here is the price close here, né? And then this one opened here at the bottom and closed right there at the top. It closed right at the top.
But excuse me,
Yeah.
you just said the red one opens below and then closes above. Was it not supposed to be the other way around?
We are trying to study the behavior of these candles. Ne? What happened here is this one, it opened here, right? And then it closed here, right? Yeah,
Okay.
you're correct. It should be the other way around. And then the
Mm-hmm.
next candle, it's supposed to open here. But what happened? It jumped to go open higher than where the previous one closed. Are we fine there?
Yeah, now I'm fine.
Okay, and now you're fine. Correct. I see you are following. That is, the body of the second candlestick opens above. That is correct. It opens above, ne? And closes in the second lower half, which is, this is the half of the previous candle, isn't it? And then the lower half is this one, ne? It closed in the second lower half, because this is the first half of the candle. This is the second half of the candle. It closes in the second lower half of the first candlestick. Hope we are fine then, eh?
Yes, sir.
So that kind of behavior, it's known as a dark cloud cover. It opens, that is the opening, and then there is the closing. Then we have a bullish piecing. It's just the opposite of the dark cloud cover. This is a two candlestick bullish pattern. The first candlestick has a red real body. Ne? The first candlestick has a red real body. The body of the second candlestick opens below and closes in the second lower half of the first candlestick. That is what we have, just in a similar manner. And then we have a bearish harami. These are just the type of candlesticks we are looking at. We then have the bearish harami. It's jokingly known as a pregnant woman or pregnant women. Okay, this is a two candlestick bearish pattern. The first candlestick has a green real body. That was we have there. The second candlestick real body is contained. It's like a pregnancy. It's contained within the first candle body. It didn't go away. It didn't go anywhere. Not above, not below, but it's just between the pardon?
Nothing.
Okay, good. Okay, that is known as a bearish harami. And then the second candlestick may be red or green, it doesn't really matter. And then we have the bullish harami, more like a pregnancy also. Those are harami versions of candles. They were invented by Japanese. We are just trying to study their names. If you see something that looks like a pregnancy, then you know it's a harami. We'll get to their functions later, but for now we are just going through their names, okay? And then this is a two candlestick bullish pattern. The first candle has a red real body. The second candlestick real body is contained within the first candle body. Then the second candlestick may be red or green. Okay, it doesn't really matter. This is a three candlestick bearish pattern. The first candlestick has a long green real body. That is the evening star, né? Market gaps up to the second. Let me explain what is a gap. A gap is usually a jump, né? See this price, this candle opened here, and then it closed there. So the next candle is supposed to open here, but instead this one jumped to go open there. So this space that we have here, that is what is known as a gap, né? That is what is known as the gap. Market gaps up to the second small candle body can be either color. That is the gap that we have there, the jump that I was explaining. That space is what is known as the gap. And then the third candlestick is a red candle, ideally gapping down from the second candle. So it contains three candles. The first one closes, the second one jumps to go open at the top, the third one jumps again to go open at the bottom. When you see things jumping around in the market, just know that things are not fine. Something is about to happen. Either the buyers are about to take control or the sellers are about to take control. Just a moment again. Okay, then that is a gap, then followed by the morning star. This is a 3. It's built using 3 candlesticks. Opposite of the evening star, that is the first candle has a long real body, and then the second one, it gaps, it gaps up to the second small candle. It's supposed to be market gaps down, not gap up again. Market, we have to fix this slide. There are some minor mistakes. Market gaps down to the second small candle body can be either color. Then from there, the third candle, it's a green candle, ideally gapping down from the second candle. Supposed to be, it seems when we're drafting this slide, we're doing copy and paste. So ideally gapping up, not gapping down, because it gapped up. And then that's creating a gap. That is what we have there. Being able to recognize, pardon?
Can you go back a
sir.
bit? I would like to ask.
Sure.
So in this case, you only consider the bodies when you talk about market gaps, not the shadows. You
Yeah, you
don't
consider the
count
body.
the shadows.
Yeah, you consider
Oh, okay.
the body when we are referring to market gaps. But sometimes
Okay.
gaps usually happens with shadows also. If you see here, these gaps were very clear with shadows also.
Oh, okay.
Yeah, but in most
Sorry,
cases, gaps are common with shadows. We don't really consider them with body. But yeah, bodies are more powerful than shadows. That is the other things. But so long there's a space, let's just say it doesn't really matter. So long there's a space in between, that is a gap.
Okay.
Okay.
Before you leave that slide, are you
Pardon?
before you leave that slide, are you gonna show us in future how we're gonna trade that? Or
Yes, these are just
Okay.
the basics that we are
Introduction.
covering.
Okay.
There's still a lot of things that we need to cover, and we are going to combine these candlesticks and the other things that we're going to cover from tomorrow to make our trading decision. But when you be
Okay.
seeing a gap, for now, I just want to put it in your mind that when you see a gap, you should know that something is about to happen. It's either the buyers or the sellers are about to take control. When you see a green candle, you should know what it means. When you see a red candle, these are just the basics. How to use them to trade is something that we're going to cover at a later stage. Are we fine?
Okay. Thank you.
Welcome. And then being able to recognize a common candlestick pattern provides valuable insight into possible trading opportunity. Being able to identify or to tell this pattern behavior, it helps us identify opportunities. That's why we are learning it. And then we have these the 4 things that are very important: the color, the body, the range, and the shadow location. That is what we have covered. It seems we have come to the end of the session. Just to wrap it up, green indicates what?
Bullish.
Red
Bullish, which
indicates
is like bearish.
bearish. When the body is huge, it indicates what?
A stronger can be
Yeah,
strong.
a smaller body indicates.
If we
Sorry?
What does a smaller body of a candlestick indicate?
I think the smaller body represent that if it's in a green, that the buyers are not that strong.
So in short,
Yeah.
a smaller body indicates weakness. A bigger body indicates strength.
Mm.
Are we fine there?
Yes,
Yes.
What does the range indicate?
bearish.
The range indicates the volatility in the market, how fast the market is moving up and down. The range is the height.
Oh, yeah.
Gosh.
Okay? And, and then the shadow location indicates
How far the
the
market was pushed.
perfect. And what is the other name of a shadow?
weak
The wing.
wink or wink
Wing.
wink
Oh,
Weak.
weak. Oh,
Weak, ne?
or
Yes.
weak or weak.
it's the
Okay.
CK.
Yeah. Yeah. WICK.
Okay.
Yeah. So this brings us to the end of the lesson for tonight. Thank you for staying
So,
until the end. Our next topic for tomorrow, it will be introduction to technical analysis. Same time, 8 o'clock. We are going to learn what are supports, what are resistance, and just to build on from what we have covered today. Do we have questions on what we have covered today, not today, tonight, or comments?
I have a